Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Oh,
Marco, how are you, man?
Hey, Felix, I'm just setting up my mic here.
All right, good. A few things out there so we can go over. I see a lot of movement. I'm not sure I see a lot of, the market goes up every day, so I'm not sure I see, it's more a lot of more of the same. But let's go through it. But I think that why don't you tell me? Are you seeing much? And then I'll tell you what I.
It's better than yesterday. Let me tell you that. Much better. I've been catching some golden nuggets here and there, and one of those is Under Armour. If you want to take a look at it, share your screen, and kind of go through it because
let me take a look here.
Looks like one specific buy, and with some news around it, it could be something good to tackle.
All right, so let me show you my screen.
Okay, I can see
it. You see it? Okay.
Yep.
So what are you looking at, Under Armour?
Under Armour, we're looking at March 19th.
Okay, UAA. So we were long this for a while. They just expired for us. And so somebody looks like people were long January options, and so it looks like they're probably re-upping here. Yeah, this looks good. Just right off the bat, I think I could tell right off the bat it looks decent. Just to make sure. Okay, so again, I'm looking. Let's just go through the process. Under Armour, I'm looking. Implied volatilities are up, so the prices are up on the board. Obviously, there's a big to do right here on the 20 calls. So someone's buying the Under Armour March 20 calls. They paid at around $9.50, so prior to 10 o'clock. Stock opened up at around $18.30, shot up to around $18.70, $18.80. So by buying calls, by buying calls like this, you would expect the stock to go up. They bought 13,500, looks like, in a period of 4 minutes. They paid 108 for 4,700, 124, 3,400, 126. So that's good. The implied volatility should go up. It was 59.5 to 62. Okay, so this is yesterday's volatility was what, 56, right? 56 around 57. So you got a 56.7 close yesterday. Today it's 62, up 5. You have the volatility trending higher as the purchases were going up. That's another good sign. 2. We see that the premiums were actually increasing as well. Just another check. 3. And then the offer side, it looks like in the beginnings were offer, and then they slowed down here, and they basically, sellers came in willing to sell them here. So that's why there's some on the bid. So it's offer, bid, and then they sell some here at the bid. So I would say that that's a buyer. Okay, that's a buyer. And right after he was done, then you see it went the other way. The volatility came back down, and it's found its level here. Okay, so yes, I would confirm that, yes, that is a buyer. There is no open interest, so it's opening. It's exactly what we look for. Now, let's just take a look and say, next step is, okay, what are they thinking? What are they thinking here? So I look at this just to get a gauge, 23.92. I think it's probably going to be around 24, 25. Okay, even up to 26. You could also see here that, if they thought 27, then they would be buying at 22.5, right? They'd be buying a lot higher. But, it's hard to think that it's going to 27.5 when the stock is 19. And that's what, so if you threw 27, 28 in here, this is going to pop up telling you, hey, you're well outside of this sort of range that the guy, the top guys are thinking about and how they play the game. And, you're talking about the 22 calls at 70 cents or $25 calls at 37 cents, because you think it's going to 29. The question is, it's trying to say to you, why do you think it's going to 29? Like what what makes you think this is going to go to 29 in the next 8 weeks? So it's trying to push you back down. Okay, the board, the options chain, the new options chain is trying to push you back down to some sort of level where, you know, this guy's thinking 24, 25 seems to be appropriate, because if you pay $1.30, you know, at 24, you know, it's 100 and you're talking about it's probably closer to 25, 250%, you know. So this is sort of where, you know, he's thinking about, he has to be thinking about in order to buy this. Or, okay, that's one or the other. So it's, or I see the chart out of the corner of my eye. I see the chart just going from 10 to 20 in 9 weeks. Or he's been long here because, so we have we've done the analysis, right? He's a buyer. He's an opening buyer. It's big size. Okay, he's spending $3 million in premium. He's still going. It looks like that he's still going. You see the premium, it's still going every minute. You know, he's still buying. It's a computer that's just taking offers. Okay, so he's still in there. The question is then, what's his target stock price? We said 24, 25. Open interest, good. So we're good. Option analysis is good. We got 24, 25. Let's look at our charts. All right. So now I want to forget everything I just did. I'm going to forget everything we just did in the options, and let me open this up to be bigger so everybody can see. Okay. So I'm going to look at stock has come down a long way. UOA, part of the story of UOA is potentially accounting issues. So they had come out with potential accounting issues. I think we might need 6 years, 7 years. I just want to show you potential accounting issues with the CEO, the former CEO. Stock took a hit here with coronavirus.
Make sure you just inspect.
Yep, let me inspect it. Sorry. Okay, you can see me? Yeah. Okay, so the stock took a hit here, but you see where it was coming. This was a darling. UAA was a darling for many years. Part of the story was, you know, they were supporting some of the, frankly, they got lucky. They supported Steph Curry early on, and then Steph Curry from the Golden State Warriors becomes MVP, runner-up for a year, MVP 2 years. You know, he's the man in NBA. And when you're the man in NBA, all the kids want your clothing. They want your shoes. So they got lucky here. They got lucky with a couple of offers, and the stock was doing tremendously well. It hit a snag here. What happened here was essentially people started buying the trend of athleisure wear, which is leisure wear, you know, but dressing a little bit more sporty, even in the workplace. Was really started right around here, and you saw Nike really pivot here, Reebok, Adidas, or Adidas, and if you say, my wife is English, so I say Adidas sometimes, but otherwise she yells at me. But Adidas and everyone started going, athletic leisure wear, athleisure, and this trend persisted. So if you look at Nike was doing really well, and these other stocks did well. UAA stayed true to their business, which was they're going to build clothes that improve your performance, your sports performance, and athletic performance. And while that's good, the market was sort of moving away from them in this other area. And I think I know this because, I mean, and if anybody's ever played sports or, you know, as a kid, you know, if you're wearing Nike shorts, you don't wear Under Armour shirts. If you wear Nike sneakers, you don't wear Under Armour anything. If you wear Under Armour shorts or shirts, you don't wear Nike sneakers. It's a fashion statement, right? Also, it's a fashion statement. So the more Nike was making sportswear, athletic wear, leisure wear, a fashion statement, the more people were getting into the Nike home or the ecosystem. Now it's even harder to break that because Nike is going digital. They have an app. They're constantly, giving you discounts and constantly giving you things to jump on board, the new sneaker and the new this and that. You know, UOA felt the pain here. They missed that whole leisure trend. And that's the major trend. Women, were going the other direction. So this was a big problem. And then obviously when coronavirus hits, that's the nail in the coffin because, kids would go in there to buy gear every year, replenish. They have summer leagues, they have everything. That doesn't happen. They have a lot of problems. And then the stock is here. So people were looking for a turnaround story here. This was a high flyer, big momentum name 5 years ago. The stock just went from 10 to 20. People were buying calls. We were buying calls when it was here. We bought calls here. They just expired in January. So we were able to catch this run. People think there's more. Now, this person thinks there's more. And you can, he's thinking 24, 25. Can it get there? Give me a good earnings. This hasn't had that blow off top. So maybe, yes, it could get there. I'm concerned that it's a guy who bought stock here, and now he's just flipping out stock and buying these 20 calls just to, have, and if it goes up, great. But I'm taking money off. If I'm someone here, and it goes to, if it doubles basically from 9 to 18 and a half, and I get a double in, let's call it 4 months, what am I thinking? I'm thinking, okay, let me take some off the table, take some money off the table. So I don't know. Let's just see who owns the stock. Maybe we could see who's the call buyers. Let's get this out of the way here for a little bit. Call buyers. I'm looking for call buyers, not Credit Suisse because they're an investment bank. D. Shaw is a hedge fund, but it's a volatility hedge fund. Don't care so much. Scopus, that's someone here. So they're long 15,000 calls. So they were as of September 30th. So maybe this is the guy we were following, right? We're long those calls. He's one of the guys we're following probably here. And they pop up a lot. I don't know a lot about them, to be honest, but I have heard of them. So it looks like they're the guys that were long these calls, that we're probably following, and probably a couple other guys because things are popping up in October. So this is the board. I'm just trying to show you sort of who might own this, but you have a lot of guys who've come in here owning the stock at September, and the stock, I can tell you, we bought it when the stock was 12. Okay, we bought it right here, and people were getting long over here. So naturally, somebody's going to say, maybe I can just take some off and buy 20,000 calls or 30,000 calls, maybe. So I'm a little concerned about that. Market goes up every day. It's trying not to reach. What happens and what will happen, I don't know when, is the market there will be a lot of reaching, and there is a lot of reaching. It's been going on for a month, and for the most part it's been working, but there's a lot of reaching. And then I had a lot of emails last week, actually, when the market just dipped small. It's not even like a big crash. It's like a 1.5% move down, 2% move down, and people lose 60% of their portfolio because the calls that they're long get crushed. Okay, so the market has a funny way of being this tidal wave where when in a tidal wave the beach goes, the beach extends and the water gets to a very low level, and you're able to go very far out into the ocean, and then this tidal wave comes and you can't get out fast enough because it's a 100-foot tidal wave and it just knocks everybody out. So this is the type of action we are seeing where people are winning. Like a tidal wave, you're having fun in the ocean, and you've never been this far out in the ocean, and this is amazing. And you don't see, there is danger. It's just not, and people are on the beach going, come back in, you're way too far out. And everybody's like, yeah, but it's fun. Well, it is fun. People are making money. But like I said, last week, I had a disproportionate amount of emails of new people telling me I just lost 60%. I was up, I took my account from 5,000 to 20 or 20 to 80, and I just gave back 40 of it in one day because you're so leveraged. People are so leveraged, and they lose back 30, 40, 50% in one shot. So this is what I suspect it is. I'm not saying I don't know, but I'm a little concerned. I like it though. I like the way they came in. I like it's the story. It's the story that I'm a little concerned about, and this chart. It's logical to think that somebody would say, let me get out of my stock and get into some calls. And I'm concerned about that. This is a big level here, 20. If it breaks through, then you have a gap here. It could easily get to 24, 25. So I see the thinking. I'm not sure. I have to do some more thing. I would do some more digging on the last conference call, because I don't remember it really. I probably briefed it. I don't remember it. But what's exciting about UAA right now is what I'd like to figure out. All right.
Okay.
But it's good. I like it. It's good. That's good. Very, very good.
Cool.
Very good.
All right. Awesome.
What about the next one?
Next one is IQ.
Yeah, perfect.
IQ.
This one. Okay, I know the name. So I know the name because Baidu is involved in the name. Okay, so let's just look at IQ. And we were long Baidu, and part of the reason we got bullish on Baidu at 130, where it was now, it's ridiculous. Part of the reason was that they own part of IQ, and IQ had fraud allegations. Okay, so there was fraud allegations. IQ, the SEC was looking into them. They are cooperating with the SEC. They did their own audit in IQ, so everything is great. The stock still went down. They had say here, I believe there was like a secondary, or for some reason the stock went down here. I believe there was some sort of secondary or something, stock issuance. Stock got hammered in late December, and now it's climbing back up. IQ is called what? Do you know, Marco?
IQ, the name of it, or
do you know what they call IQ?
No.
The Netflix of China.
Oh, okay.
Okay. Just so happens that one of the biggest UOAs today, and one of the biggest names up is Netflix.
Yeah.
It's up 15.5%, right? So you see what's happening here, and you see, I don't think coincidentally that this is somewhat related, but remember, we're seeing this pattern. Someone sets up with options, and then you have this story. Where did we see this before? We saw Futu, which I think is up again today. It has to be up on this type of tape. But we had Futu, and Futu we're seeing call buyers. Stocks were starting to move up and bubbling a little bit. There's volume, there's call buyers, and then all of a sudden, it's more and more voicing of the Robin Hood of China. So IQ is there's people in this name, like I believe it's Muddy Waters, probably Citron. All the short sellers are thinking, they have proof. In this day, proof doesn't matter. The story rules the day. So, something like IQ, easy story, Netflix of China. What else do you need to know? Right? Netflix of China. And look what Netflix did today. It's up 15.5%. And, let me remind you, there's a lot of people in China, and there's a lot, X times the number of people in the United States. And imagine if everybody in China, gets IQ service, imagine where the stock would be. You tell somebody the story, and all they repeat is, it's the Netflix of China. You got to be long. Look at Netflix.
Right. It's an easy story. It can catch fire real quick.
Exactly. Easy story, not even to understand, but also to just say the Netflix of China. So it doesn't strike me as, it's not coincidence, basically, in my mind. And I think that let's look at it. Let's just look at it. I mean, what are they buying here?
$24.
So they're buying the $24 calls. There's no open interest, so it looks like they probably are buying it. Implied vols are up a little bit, so they bought some here in the morning, 5,000 lot, and then 9,500. Let's just take a look at them here. No spreads, so they're getting long. This was 65, so this was 7. This one might have been could this have been a sale right here? I don't know. Could it have been a sale? This looks like for sure it's a buy, but this one actually looks like it actually might have been a sale, but maybe not. I don't know. I don't know. But this for sure is a buy, so this gets trumped. But either way, because the IV is sort of a lot higher than where it was yesterday, maybe this just got caught up on, maybe it was because the stock went down 60 cents on sort of this print, it looks like. So, but either way, this is a buy. Maybe, I don't know, but it looks like it's a buy. It looks like the way they're buying it. Let's just go here. Put it at 1019, 53, 67. No, it looks like it was this could have been something where they printed it near the bid because they were stopped, meaning if you come in because of the way it traded right after. see this prints and then the stock starts taking off, and then this goes and the stock takes off more. Sometimes things can print on the bid because why? Because you come in and say, I want to buy 5,000 calls in IQ, and I say to you, okay, the market's 45 at 50, 45 at 50, and I say, I'll offer you 5,000 at 53, and you say, buy them. And then by the time I could even go buy them, maybe the stock's up a little bit, and now they're 50, 56, 51, 58, and I have to print them at 53. So I just tell the broker, print them at 53, so I can actually go run and get my stock. He prints them. By the time he prints them, it's closer to the bid, and it looks like a low volatility. And in fact, the stocks are running, so it is going to be a low volatility for me. So I got caught in that. But so I would say that, considering the backdrop, I would say that these are buys. Mm-hmm. It just looks like maybe there's somebody caught here. Because the continuation and ultimately the next bigger trades here are much higher vols. So somebody was hungry for them. They bought some here. They started here and they bought more here. Where does whoever's buying this, where do they think it's going? You have 4 weeks. You're talking about, you buy the 24 calls at 76 cents. You got to be thinking, let's call it 28, 29, right? 30, 31. I mean, you're buying way out of the money calls, right? Mm-hmm. Or this is 15% out of the money calls, 20% break evens on the premiums, and you're trying to make, it's forcing you to make on a 25, you got to make 3 to 1 to make that at least 3 to 1 to make that a good bet. And your confidence level when you're dealing that far out has to be higher to try to get there. So, I think this is either someone, to me, it looks like someone that might be setting up this whole game that's being played. If I can think about it, if I can come up with it, and it's likely happening. I'm not that smart that nobody thinks about this stuff. This crowd of millions of people, whether they are at Wall Street Bets, 4chan, or just Robinhood chat rooms around the world, if the leaders of those boards, if the smart people say, you got to buy IQ because it's the Netflix of China, and people start buying it. Remember, you have 1 million people. They trade 100 lot. That's 100 million shares. You can push these stocks. You can crush the shorts. And if the shorts are in this name, that's another reason why maybe they target this, because it says more to that story, right? Because it's not only the 100. Let's always say you got 1 million people to buy 100 shares, whether it's a 1 lot of options, or whether it's a 2 lot, or whether it's a 1 or 2 lot, or stock, 100 shares. But you can create 100 million shares to buy. And remember, if there's 50 million or 100 million shares short, those people become buyers when you push it high enough. So now they become another 100 million shares to buy. That's how you can sort of think about and imagine how to get this stock up to 28, 29, 30 or higher, because you can force people. Momentum begets momentum, right? Stock, you buy stock, everything is going up. You buy more, everybody starts buying more, it goes up, you buy more. It's momentum. That's the game. So, this is a very, I would say, a ripe name to get caught in a short squeeze, because there's probably big shorts in this. And let's see here, 90 cents. Yeah, looks like the borrow is probably okay. So, there's probably good shorts though in this. I don't say the borrow doesn't look like it's too difficult to get, but there's probably good shorts. And I would say that it's got a great easy name. So IQ, we've seen the same type of game with Futu. So I would remember in Futu, we were looking at it, right? This is going to be too much down here. Just to give you an idea, we were looking at it here, Futu. They were buying calls setting up here, and then it took off. So now we're looking at IQ, and sorry, can you hear me okay?
Yeah, you're good.
So we're looking at IQ, and they're starting to buy calls right here after it has rounded up, and you have a gap. So this is a gap. clearly this is some resistance here, 21.25. But if they can clear this gap, this resistance, you get to 23, and then you got to worry. The shorts got to worry from 28 to 23. There's no volume. You know, this is people getting out. There's nothing there, right? So this 23 to 28 could be like a vacuum. So if I'm Puppet Master and I look at this and I see Netflix up and I can tell a good story, and all I need is 50 million shares, 100 million shares right around here to push it through here. Maybe I could be 5 million shares early. So I buy calls, I start pushing this. Me buying calls pushes the stock. Then I can push the stock with some more stock. Buy calls, push the stock, and I buy stock too. And I want to get it through 21.25, and I want that story to start going. Get that story going and get my army of people that are on Wall Street Bets, you know, that I'm paying them, you know, $40 an hour to just start talking about IQ. And all they're doing is chatting, and the chats start going up, and people start talking about Netflix of China. And there you go. You got to get through 21, 23. And then this could be, you know, this is dangerous for the shorts, 23 to 28. Okay. So there's the anatomy of a potential short squeeze or a potential, you know, big move. That's the powers that be or the puppet master might be trying to do that. I'm not sure. You know, again, there's fraud allegations. I have no idea about the internals of this company, but you know, you have people declaring fraud, and then you got people saying that this is the Netflix of China, and that's it. We checked it all out, and it's good. And if it is the Netflix of China, then imagine how high it can go.
Right.
All right.
Yep.
All right. Good. What else?
Next is actually Verizon.
Verizon,
yes.
Verizon.
It's pretty interesting.
We've seen it for a couple of days, Verizon. I've seen the name pop up a couple of times. I see what you're looking at. The February, what is this?
Yep.
February 57th. Okay. So February 15th. Now, on some of these, you know, you say, well, you look at the 57s and, 57 halves. This volatility is so low relative to the names that we're generally looking at, 19 versus usually we see 100, right? So, you might get things that are a little bit closer to the at the monies just because these stocks don't move as much in general. But I see here that they're buying the 57s 26,000 times. There is no open interest. Earnings are on January 26th. So it looks like they want to be there for earnings. So let's just go through it again here. Let's look at they're buying 26,000 of these, it looks like.
Yep.
Okay, yep. Call buying here, 13,000 they bought. They bought them 110, 114, 15. Okay, going up. IV was going up as well. 18.6. Okay. So we have the IV verifying. We have the stock prints going up as well. So that's showing that when I'm buying calls and the stock goes up because I'm putting pressure. If you buy 12,672 options, you're buying 1.26 million shares times the delta, and the delta on this is about 50. So you're buying about 630,000 shares of stock. So the stock goes up a little bit. Okay, it's Verizon. It's not like some rinky-dink stock. This is not going to move 600,000 shares. It's going to move 25 cents, but that's about what it's going to move, 20 cents. So it moves to 20 cents on 13,000. There's still call buying here. It finds its level, the balance between supply and demand of the stock, and we see more buying continuously after. Again, this is a machine. So someone is trying to just basically buy options, and you see volatility going up. Verizon volatility, it's hard to move. So even 0.5 is a lot for Verizon. It's one of those very thick names, and people have large, the investment banks have large positions in these names. So this looks like a buy. Okay. We've verified that. Now let's take a look at where this buyer has to think to buy these calls. And it's asking you, it's saying 59.60 here. So, you're paying for the 57 calls $1.30, 59.60 is 260. It's a double. So that sounds about right. But let's look at what, that just gets your money back. If you're looking at more like 60, 61, let's call it 60, confidence maybe a little bit lower. So maybe 60, call it around 60, 61. 60, 61 is what I would say. 60, 61 is probably where they're thinking. and then want to go back. Now I want to just go to the chart, right? So you saw that, right? You agree with that, Marco? Marco, you there? Did I lose you? I think I lost you. Anyway, sorry about that. Can everybody hear me? Actually, now I got to go to the screen. Can anyone hear me or no? Can you hear me? Yes. Okay, you could hear me. Great. Okay, so keep going. Hopefully Marco froze. Hopefully he comes back. But on the Verizon here. So where was he? Sorry. Oh, so we want to forget what we looked at here. We found sort of this is what they're thinking. This is what they're buying. It is a buyer. Open interest is not there. So 61 is the target stock price. Then we come over here, forget what we thought about. Let's forget what we thought about. And we want to look to see 60, 61. And if we just move this out a little bit here and move this to, let's go 2 years. Let's just do that. We want to see whether or not this is a valid 60, 61 is valid. Clearly it is. I mean, the stock just dropped from 60, 61. So someone is looking for earnings to come out. Maybe this was a year-end type of sell-off, earnings to come out, get back to 60, 61. Can it get there? Clearly it can. It was there, 6 weeks ago. So this is someone setting up for an earnings play. Also, one other thing that we should consider is that, Verizon is deep into, let's just take a look if there's any news today. Here. So, I would just go here to take a look at this, 21 billion. 81 billion. Verizon, AT&T, T-Mobile, they're spending, there you go, 5G over the next few years. So what I would say about this is 5G obviously has been something people have been talking about for many years. And, it's coming, and maybe now this is the new trend for the next year, or they're setting up, because we've been seeing, Marco pointed out Nokia just a couple of days ago. And with Nokia a couple of days ago, that's 5G. So you're starting to see more and more plays in different potential trends. These are bigger trends, maybe longer dated, but for whatever reason, Verizon call buying here, I would say, is a valid play to look at. Let's go see. Hopefully Marco's coming back so he can monitor all your activity. But next on the list, I had found. Oh, look at that, Priya. You. I see you now. I usually don't look at these comments, but now I got to look at the comments a little bit, so bear with me. But the next one on my list, the one that I've seen today, was MPC, and MPC is a name that that we have been long in the past. We have been long because this is a stock that is owned by. Let me show you. This is a stock owned by one big major hedge fund that's buying calls. This is them. I'm going to show it to you in a second. The hedge fund is going to be Elliott Investment Management, MPC. They own stock. They've put people on the board here, and they're activists, and they've caused some change, hopefully for the better. But they were long 40,000 calls. We got long MPC. Maybe Marco, are you there?
Yes, I am. Sorry about that.
Oh yeah, you're back to the party. You didn't miss anything. No, we're on MPC. We're looking at MPC. I'm just showing. I want to show people that Elliott has been long this name. They were long this name prior to coronavirus, but here they started buying calls. They were buying 35,000, 40. That they bought this. They bought I believe they started with the 50s or the 55 calls when the stock was here. They were buying the 50 calls, which meant that they thought that the stock was going 65 and above. And I was watching that. Then the stock came off. throughout the summer. The stock wasn't really moving. They were buying more and more calls. They were rolling down. Every time the stock went down, they went from 50 to 45s, 45s to 42s, 42s to 40s. Eventually, they got to 35s. So what you're seeing, we bought options right around here. We bought call options. I can tell you it was a close stop. Some people got stopped, some people didn't. But those call options went up significant amount. But whatever, that's there right now. I'm just telling you that the reason we were buying calls was because I know the guys at Elliott Management. I respect the guys at Elliott Management. I spoke to them for many, many years. And Paul Singer is one of the best at this game. Their hedge fund is multi billions of dollars. They actually have to get into bigger names because they're so big. Being an activist in small names doesn't even matter anymore. So they're in names like AT&T and eBay. They're in names like MPC. We're long eBay because Elliott Management is in there. This MPC is a name that has a lot of leverage in the company. So, when things are bad, you see what happens. Leverage, you have a lot of leverage in your company. The stock's going to go from 57 to 15. Okay, 57 to 15 because everything goes bad. But if everything goes well, then the stock could rocket because that's what leverage does, right? When things are going your way, it rockets. When it doesn't, you get crushed. So Elliott has maintained their position. They were buying calls, and now it looks like today they're trying to roll those calls. But what's interesting is that this is them. I told you they were buying the 45s, 42s, 40. They're all over this. I think they're in some other stuff. I can look at it. By the way, that open interest is getting better and almost done. So we should have that, if not tomorrow, then by next week. But so we see open interest here is 25. They've done a spread here. So they basically, you see 20,000 here and you see 32,000. So they were rolling down from the 50s. They believe this stock, remember when they were buying this, I told you they believed it was 65 plus. Okay, so we're at 46. It's just made a nice move here. The oil sector's back. This to me looks like very clearly that they're just selling the 45s and they want more leverage. You see how they sold 20 and they're buying 32,000, and they can do that and actually take in premium. So they sold 20,000 at $4, say that's $8 million, and then they buy 30,000 at $2, which is $6 million. So they actually take $2 million off the table and they get bigger at the 50 line. Okay. So they get bigger. So this is more of a, even though they're selling these calls and buying these, if you know the story, then they are coming into the name in a bigger way with more leverage. Okay. Because they think, hey, remember the whole thesis. If oil's good, if the sector's good, then the amount of leverage that MPC has, you start seeing as revenues go up, EPS goes up a tremendous amount because you're so leveraged to you have so many loans because you built out the infrastructure to support massive growth, and that's what you got here. So I think this is a very bullish, even though it looks like it might be bearish at first glance because they're selling calls and buying the higher calls. I think this is a very bullish development for MPC. The stock is trading flat. I think some of these stocks are having a little bit of a break. The stock came up, but this is telling me they believe still in the 65, 60 to 60, call it 60 plus level in MPC. And they're looking for that by April. So that would be a positive. That is a positive development in MPC. So that's what I was seeing there. Wanted to point out. Marco, we talked about Verizon and sort of 5G and your Nokia. So there's some Verizon 57 calls looking at 61 target. Why don't we just take, why don't we take a quick question? I'll give you a chance to give me a question and sort of walk through things.
All right. So, we've been doing this for a month now, and I've been actually going through 3 steps again, a little bit. Let me set it up. Okay, there we are. Okay. Yeah. So, I've been going through 3 steps. I finished it once, but I just wanted to ask you, what would you tell me to focus on the most? Like, is there any one single area, like, I don't know, the Greeks or advanced concepts or, some of the steps?
Yeah. A lot of people have those questions. So so you've learned a little bit, you learned enough to be, I call it enough to be dangerous, right? You know enough to be dangerous. Right. So now what's important is to refine what you're learning and what you're doing. I'm a believer Okay, I'm a very, very big believer in understanding the basics, but not like just thinking I know the basics. Calls go up, puts, stock goes down, you make money. I mean, value, understanding value, understanding risk reward, understanding sort of the dynamic of what's happening in the option a little bit, just understanding, and then understanding the process of how the top guys think, right? That takes a little bit of time. It's if I said 1 + 1, everybody knows 2. 4 times 3, people know 12. You know that like the back of your hand. So I can show you calculus, and I can show you how to do x and y variables in an equation, but you still have to know, adding, subtracting, multiplication, and division, and you have to know it so you're not thinking about it, right? You have to know it to the point where it's not like you even have to think for a second. You just see it and and that takes a little bit of time. It takes a weekend to understand and go through 3 steps and sort of get the gist, but it does take time to sort of absorb it and fully understand it. Okay, like I said, 5 million people on Robinhood are trading options, and you ask them two simple questions, nobody understands the answer. Nobody can tell the answer. So I think it's important to understand the product first. So that's 8 steps. Let me show you, just to give you. Let's go to the education. You have my screen?
Yeah.
Okay. So step 1, I say start with education, and you've done this. You've looked through a lot of this, right? We talk about looking at the podcasts and clips. Talk about using the tools, and then we talk about this is all about the process, who the sharks are, how they think, and what they're thinking. That's great. This is showing you how to get from A to Z, right? A to Z. This, however, being strong here helps you. Okay, being strong here, okay, in all these different sections, being strong there helps you understand the process of getting from A to Z. It helps you move in a way that, for example, we look at something today. It's very difficult to say it's always going to be like this, or it's always going to be like that, or in this situation, you always do that. It's not the case. Things change so quickly. There's so many nuances. But if you understand the subject matter, if you get a sound fundamental understanding of the product and what moves things, for example, skew, implied volatility at a high level, open interest. If you understand this puzzle, think about quantumscape. In that idea, okay, you wouldn't be able to. There's nothing radical that I showed you in that idea. Okay, everything that I showed you is in 3 steps, but there's no way you're going to be able to analyze that idea if you don't understand open interest, delta a little bit, the gamma at a high level. If you don't understand skew, if you don't understand the forward, which is in step 2 of 3 steps of understand options, step 2, if you don't understand the forward cold, if you don't understand how interest rates affect the forward and then would affect the options, these are things that, I told you before, the options puzzle, that video is so important. If you don't understand, there's 10 elements to build that idea in QuantumScape. There are literally 10 elements that you should understand cold, right? And that's what the education is doing. It's trying to make sure that you understand that. So what I say to you is, yes, you've proven that you can get to A to Z when it's presented in a way that is perfectly aligned, right? And I'm showing you some of the nuances as we go. But for you to, really start finding the little spots, it's all about making sure 3 times 4 and 1 + 2 and 12 divided by 6. You got to know that cold. So I would keep, every time you go through those videos and you actually do the exercise, some people think, why do I need to go through the options puzzle, and why you're asking me to do this, and how does that make me money? It's like, well, if you're going to be able to catch things, right? You're going to be able to catch things on the options board in real life when you can understand those things. So it's important. It's very important to keep going through that and keep going through the different elements that I outlined there, and really understand them and put them to the test by going on to the options chain, by looking at an idea, and then by coming here and asking questions, saying, how does this relate to that, or how does this relate to anything? There's one on executing like a professional. I mean, if there's not one video in 3 steps that's going to help you make money, okay, it's not going to make you money. It's going to save you money, because when you have to get out of a trade, okay, that wins, you're trading an in the money option. And do you know that the place where the call it the place that is buying your order flow, okay, the people that are buying your order flow, you know where they make the most money? They make the most money in the money options. Okay, without explaining exactly how they do it, they make it because most people don't really the bid offer. If you look at in the money options, the bid offers become wider, right? The bid offers become very wide, and so you have to guess on where, oh, okay, I'll just do it mid market, or I'll just do it close to the offer, without a full understanding of what the true value is. That so what if the market is $5 at $6, and you're saying, okay, maybe I should just, I have to sell these, so maybe I'll sell them at 5.25. But and if you sell them at 5.25, Citadel will buy it from you at 5.26, and then you got a little bit better, penny better, right? But if you put it at 5.50, you would have got done as well. So now you're left sort of, okay, trying to offer it. But what happens when you start offering options? Now, when you offer it and you actually show the world that you want to sell there, they can front run you. The machines actually sell stock in front of you on calls, or they buy stocks in front of you on puts, because you allow them to do that. And so it becomes a tricky game of like, okay, do limits by going in the middle and trying to find the price. But once you do that, the machines know, and now they know what you're trying to do, and they can just front run you. Okay. And they do, and they will. Okay. It's a very easy game to play. So, it's better to understand where you should be first and say, okay, maybe I can give a nickel here, and I'll just, instead of giving 20 cents, right. So you do that one time on a 10 lot, that's $200. 20 cents on a 10 lot, $200. It adds up over time. It adds up over a lot. It adds up to a lot of money over time. So these are nobody gets that, and probably that's one of the least watched videos, execute an option, yet it's one of the videos that will teach you how to actually think about where you should be offering that option. And you can do a little Excel program, or you can create something for yourself that says, okay, the value is probably here. So that's what I would do. I would keep going back. Each video is designed to feed off the next, and it's also designed to actually either help you save money or help you find ways to find opportunity, which in essence is help you have an edge or make money over time, a fundamental edge. So I would keep going through those lessons, and then just ask questions. Just ask me a question about any lesson, and I can tell you how important that lesson is. People think it's not even important. I can tell you this is super important, because some of the best ideas, when you see them, are going to use that. You're going to use that, we gave an idea in a name, and I usually don't do the crazy spreads or anything, but sometimes there's a lot of edge to trade, diagonal spreads in some of these names, that we're looking at. But you know what? Options Geek members are not ready to use diagonal spreads. At some point, for the more senior traders, there is edge in doing spreads and in certain instances, but you have to know when that instant is, and there's no way you can learn. Think about it. I was teaching you yesterday about the expirations, right? I was teaching us about the expirations, and I was teaching you how, the different IVs and the different expirations and how they should be. Right? It should be that the IV for the earnings month is the greatest over the IV for all the previous months, all the previous weeks or months before. And so when you see people buying, 4-week options, and that doesn't have earnings, but the 6-week option has earnings, there's an opportunity there, because things have gotten out of whack, and now you can actually trade something or a spread to kind of, you might trade for 20 cents, but it's a high probability you're going to make that 20 cents. So, these are things that you will learn. I leave it, in my coaching, I coach people through specifically these things and how to find them and how to play them. And it's a little bit more conservative way to do it too. And you're eking out, 20 cents, and you realize that, oh, wow, you can actually make a lot of money just like you're playing the regular way. And you can make a lot of money, and the direction doesn't even have to be right. But that takes a little bit more understanding. It takes a little bit more hand-holding to get comfortable with what you're seeing. And you can't really teach that unless you know the basics, right? This is the basics. So, look, the board is a puzzle. It's a puzzle, and it's moving pieces. And when something moves out of line, you know, it becomes an opportunity to say, how do I actually get in there to sort of, you know, because it's out of line, maybe I want to sell that option and buy some other option. How do I do that? You know, that takes know-how, and it starts with 3 steps. It starts with understanding that, and then, you know, maybe someday in the future, I come up with new. For right now, I keep it simple. You know, if somebody wants it, and you know, through coaching, I coach people through it and help people out that way. But that's what I would say. I would just say there's so much. You know, you're building this house of knowledge. And what 3 steps is going to give you the soundest foundation. If you understand what's in 3 steps, it's like the foundation of your house is going to be huge for you to grow off. I show you one process. That doesn't mean it's the only process. I think it's a good start to a bigger process, right? Using unusual options activity is a great start, you know, but then outside of that, to add on that, people have their own process. They look at charts, they look at different things. That's where the power becomes for each individual person, and everybody finds their own patterns of what they're looking for. So that's what I would say to you. Just keep on, you know, go through the individual lessons and go over them every, you know, a month from now. Or you hear me say skew, go back, become a, you know, the skew video is probably 40 minutes, 36 minutes, you know, become an expert in skew and understand, okay, that's what he was saying. I understand now, and I understand that things are moving. I always think of it as this puzzle, and something's moving outside of it, and you're saying, wait a second, there's opportunity there because this is moving outside the puzzle, and maybe we can take advantage.
Yeah, it's still for me, like when you say, okay, if they're buying calls, what is happening on the other side, I have to think about it to remember. Once I know it at the top of my head, like you do, that's when I can.
Yeah, because then now you're thinking at a higher level. You're starting to say, you know, what you're trying to do is remember, I go to A and then I go to B and then B to C and C to D. But what happens if they close the highway out, you know, from B to C? And now you're like, well, I need to get to D, so I have to go to C first. And it's like, yeah, they closed the highway. You can't get this. Now what are you going to do? Right. And now you should start thinking about and be creative and say, okay, well, I can look at this, or I can look at that, and I can go around, and then I can still get to my answer, but I'm just going to move a little bit. I'm going to shift a little bit, right? So we're giving the ABC, we're giving that step, but sometimes it's not exactly so easy that way, right?
Yeah.
Okay, cool.
Great.
All right, good. Let's, I mean, look, we can just go through what time? I lose track of time. Yeah, we could do some UAAs.
Yeah, we can do some US. We got Ford and Delta if you want to take a look at those two.
Oh, Delta Airlines. Okay. You like Delta. Let's see here. Let's take a look.
I like the long-term play potential.
Let's see. Okay. Delta Airlines. Are they buying calls?
I think so. Yeah. That's what I have you for. Yeah, exactly. Help me out and confirm.
All right. So chart looks good. You know, I mean, we talked about they're buying airline calls. We picked up on that. This is 2 weeks now. So let's go to the daily. Okay, we've picked up the call buying right around here. Okay, last few days. But let's go to the videotape. DAL. Yep. DAL. Excuse me. DAL. Don't look at this. First thing, what should you see? First thing, see this is all negative. First thing that I want you to make sure that you see what I see. First thing, immediately it's like I make them red so that you see, hey, there's a lot of red there, which means that in general that the board is coming in a little bit. Prices are coming in a little bit in general. Although this one seems like it's going up, which is where probably you're looking at. Is that right?
I was looking at January. Actually, yeah, 22. Yep.
Let's see these. Okay.
So it looks like a spread of some sorts.
So it's a high spread. So it looks like, okay, so I'm going to exactly tell you, I'm trying to tell you exactly what I see. I see this is all negative. It's one. I see immediately when I see this and this, I also look at this, 11,000, 8,000. So I see something here that is, I'm not sure if it's closing trade or opening. So I'm a little concerned that I'm not going to be able to get the answer. Okay. Now I'm going to check the 60s. The 60s look like volatility went down here. Look like volatility went down, right? You see here, 1010. So let's look around there. Okay, here's the flow, 44.6. 44.6 is about near the low. Okay, so it looks like it's a little bit lower than yesterday. So, but here we see on the offer, Okay, so it was on the, this one was on the offer. This one is half on the offer. But the vol is going down, so I'm not sure. Okay, so it also looks like a spread, although there's no spread. Sometimes, data is data. It's sort of like you also got to see what's happening. So we're going to look at the time stamp on the other one to see if it's around 1010. And now I'm going to look at the 80s, and you see here 1010. So it looks like, see, this one shows a spread. Sometimes, it's just an accident. It doesn't come out. The spread doesn't come out. So you see these are trading almost, it looks like at right around the same time.
Yep.
Right. So this is 41 vol. The other one was about 44 and a half, 44 to 46. So, and this is on the bid side. The other one was a little bit offer sided, I believe. So someone buying a call spread.
Felix, your voice got a little bit. Can you just adjust?
Yeah. How about now? Can you hear me now?
It's still messed up. Okay, can you talk now?
Hold on 1 second. Let's just see.
Okay.
Can you hear me okay today? Right now?
Yeah, no, it's good. Now it's good.
Okay, good. So you have so it looks like a spread, even though it wasn't. It didn't say, the other one didn't say spread. So it does look like a spread to me. The fact that volatility is down, open interest is up. It looks like someone may be buying these, but we don't know if they're buying them to close today. So it becomes very difficult to say what exactly is happening. It's also 60 versus a stock that's 41. I know it's January, but you're talking about an area that is a little bit outside of where in general people might be looking at just in general. So I would say it's not something I'm terribly excited about. But I would maybe check tomorrow to see whether or not this was a buy or a sell. If it's a buy or sell, this could be someone who was long here, right? And now he's just rolling down, or he has been rolling down. There might be some history. You can go back and look to see how maybe this was 20,000 2 weeks ago, and now he's rolling down to the 60s because he had bought the 80s, and now he's just rolling down to the 60s as he sees that this is starting to turn. So it might be bullish. It might be bullish that he was wrong here because he bought the 80s. And I'm just throwing something out there. And he's buying these now, but frankly, I can't tell. So, my confidence in making sure that I know exactly what happened here is not high. And so it's not something that I would look at, although I'll keep it in mind because we've seen call buyers and all of a sudden United Airlines, Delta, and American Airlines is popping up again. It might just be that this is a overrider at 60 and someone saying, you know what, buy these back and sell the 80s, instead. We don't know.
Okay.
Okay.
Good. Thank you. What do you say we finish it up with Ford? We got a few people asking for it.
Okay, Ford. So Ford, go ahead. What are you seeing? Ford.
I'm just seeing a lot of volume in
yeah, I mean, we've been looking at this and the stock is trading up. Obviously, GM is trading well. I think when people think of GM, the next obvious one is Ford. I know Robinhood people, it pops up on their list of people being long. It's also a $10 stock, so it allows people to be long. I would say that it's difficult to be sure of what's happening here as well, because if you look, again, the first thing I see, yes, volatility is up, which means they're buying options. But are these buyers, you see this open interest? I would have to go dig in to that open interest and figure out when did that trade? Okay, when did that trade? And what happened on that day? When did that trade and what happened on that day? Now, I can get the data, I can go look, but I'd have to go through that to figure out. I'd have to look at this one, the 10s. When did that trade and what happened, right? Now, Ford is in, obviously, they're big EV players as well. But I look at Ford and GM as two different types of companies right now. I look at Ford as a company that is building the cars, right? Building the frames. They're very good. They have the factories. It's to me, it's still sort of an old company that's just switching from, diesel or whatever to clean energy, right? And GM, while it has that component, they're working on the software. They're working on the brain. They're working on, what makes this car move. It's no longer going to be the key, or it's no longer going to be the gas. It's what makes it move. How does it move? Batteries, and that's new technology. So is Ford working on that? They might have. To be honest, I've focused most of my attention on GM, and they might, for all I know, they have all this new technology, and they're trying to be just as big as GM in the brains, not the muscle. But when I think of Ford, I think of muscle, and when I think of GM, I think of, we don't want to be the muscle anymore. We want to be the brains.
Do you think that like stuff like the muscle, let's call it, could become a commodity, and the brains could be like,
right? That's what I've been saying all along. Like a lot of these everybody's coming out and saying, yeah, we're going to make this EV type of car, or this car, or that car. To some extent, there are factories. These people are not making the cars. They're outsourcing them to a factory, right? So you got to think about it that way. It's like, you're just because you find, I come up with, I want to make, cars that look like an airplane, that don't fly yet, but they look like an airplane, and I want to make them EV, and I want to design it like this. Well, I'm not going to actually make the car that I dream up like that looks like a plane. I'm going to actually go to China, see, deal with a factory, and some factory in China says, yeah, we'll make them for you, and we'll make them this way, and we'll stamp your name on it. So the options key car that's EV, I can do that, and I can be working out of, we looked at one of Solo, right? It was something, and and the idea was, they have a shop, and it's in Vancouver, and they have a small office, and they're $1 billion company now, just because they're going to make these cars, and they're not making the cars, they're outsourcing them to a Chinese factory. So this is a commodity. Something Chinese, if a Chinese factory could do it, a German factory could do it, a US factory could do it, it's commodity. What people can't do is take the hunk of junk and make it go to the next block without a drive, without touching it. Can you do that for it? If they can't do that, then they're the muscle. It's like Apple is going to step in and say, yeah, I can do that, and they're going to put a little chip in there and say, see, you put this in there, and boom, it goes to wherever I want it to go, from right here in the palm of my hands. I want it to go get my food. It's a driverless car. I don't even need to be there, so I literally could take my car to the driveway and say, go to, I like pizza, I'm from New York, go to this awesome pizza place down there, sit there and call the pizzeria, and they just put the pizza in the car, and now come back, and now the car comes back in my driveway, and I got my pizza, and I'm watching Netflix, and there I go. That's my night. So at the end of the day, I think it's the software that is most valuable. Not saying that building EV is not valuable, but at the end of the day, when people wake up, anybody can build. If you have a factory and you want to outsource your idea to China, by all means, go do it. You have a great idea? There's factories. So commodity, that's called a commodity business. We're getting away from that. It's becoming technology, and there's those players like Apple, Tesla, Uber, General Motors, Google, Baidu, the big players. Why? Because it takes an enormous amount of money to build that infrastructure of software, engineers, and that idea. It takes an enormous amount of money. If you look at Apple's doing Project Titan, and go look at Apple's research budget each year, you can see on the front, what are they researching? I always used to ask myself, what could they possibly be researching with $200 billion or whatever the amount of money is? Well, a lot of that is going into autonomous driving, into beating Tesla, into a number of other things. AI, building a new A model in advertising, probably. I mean, everything, but it takes enormous amount of firepower. So I would say Ford, look, it's got legs, and I'm sure they have a good EV truck, probably better than GM, whatever. I know people can say that, but at the end of the day, what wins in this car game is going to be software. So show me Ford has software. And to be honest, I don't know. I'm simply looking at it from a bigger perspective. Show me Ford is getting into the technology game, and I'll say, okay, now it's getting really exciting. It's getting really exciting. All right.
Ray's saying that they might have some type of new with Rivian, so I would have
Rivian. I did read something like that. I didn't understand what it was, but yeah, show me that, and that's what. Look, that's awesome. And who said that?
Ray,
you get a gold star. So Ray, that's exactly what I want to hear from you guys. Just if anybody knows, you like a chart, whatever, this is what it's about. I don't know the answers. I'm just telling you at a high level. But if we can piece together what's exciting, because maybe that is the exciting part. And I haven't looked into it, to be honest. But I did. It caught my eye. Could have said something about Rivian, Rivien, and I have notes here to say, go look at that. But if that, when you're looking at the story, we're doing the option analysis. We're looking at the charts. And by the way, if somebody's a better chartist, just say it and say, you're wrong. The chart, the stock is going to get killed. The stock's going to go up. But we're looking at charts. And then there's the story. And in the story, there's little tidbits. And really what I'm asking of everyone is, how does the company make money? Okay, Ford, they make cars. Okay, we kind of got that. But then you got to go a little bit further to ask yourself and to reveal what makes it exciting right now. When you have $1 billion, $2 billion to put to work, and you have to make the decision to buy 100,000. See these 100,000 calls, or the 12 calls, and you have to make that decision to buy 100,000. Maybe you're selling them, but you have to make a decision to trade 100,000 calls. You're doing that because, let's assume there was a buyer. You're doing that because there's something exciting about Ford that you believe is going to be released. And once everybody understands it and understands the power of it, then you will, that person, you in this case, would make a fortune. So that's what we're looking for. I mean, look, I'm not long this ATVI. It's really annoying. But once I read it over the weekend, I wanted to get long it. I'm trying not to reach at every single idea that I like, but at the end of the day, to me, this is, I'm going to go back to it. It's, people have a hard time. All the Harvard guys, all the Penn guys, all these guys, it's hard to evaluate something that's brand new, a transformation. ATVI is no longer the same ATVI. Over the last 7 months, 8 months, it's changed into a different type of business model. And that business model is hard to evaluate when you only have 2 quarters. And I'm telling you, when you have 2 quarters and the stock is, the revenues are going up and margins are going up, it's like, where does it stop? What happens is the next quarter, they show similar type of thing where its revenues are up and margins keep going up. I mean, you start thinking about, this is incredible what's happening. So, this is the type of stuff that hedge funds get super excited about. I'll give you an example that's very difficult to value. Apple in 2004 came out with the iPod. What was that thing? It was the iPod music, right?
iPod.
So I'll tell you a quick story. We'll end it with this. Okay, let me get out of here. All right, so I'll end it with a quick story. So it's very difficult for Wall Street to evaluate certain things. So when Apple came out with the iPod, I believe it was 2003, 2004. Okay, I was late to the game. I was 6-7 months late to the game. Apple had gone from like $10 to $17, $18 at the time. This was way pre-split. Like, we're talking about 16 years ago. I was late to the game and I bought this. I had a Sony Walkman and I bought this iPod. I was like, yeah, what is this? I'm not a computer person. I was like, I got to like download music. I'm like, okay. When I tried it, I thought this is going to change the world. Like, wow, I can't, like, for me, I think of what could be. And it was clear to me that this was going to change. Now, the thing is that the estimates for the iPod, were going to be, they were like 2-3 million they were going to sell. And then the next year, 4 million. And I asked the question to the analyst. I was at Bank of America at the time. I asked the question, how many, you're going out 5 years. And if you add up your estimates, Apple might sell 10 million of these in 5 years. And that would mean Apple should be worth, it was 18, should be worth like 27 or something. And I said, I simply asked the guy the question because I had looked it up. I said, do you know how many Sony Walkmans they sold during the 1980s? I have one. Most people have a Sony Walkman. And he didn't know the answer. I said, take a guess. And he didn't want to guess. Like some, and I was in a room, a lot of people in the room, and I said, they sold 100 million, right? 100 million Sony Walkmans. I said, you only have Apple selling 10 million iPods in the next 5 years. Don't you think that might be a little low? Like, why not be a rock star here and tell the world, you know what? This is the number. It's because Wall Street has a hard time saying this and this and this is going to happen. It makes it very, very, very difficult to actually to put pen to paper and say, this is how you value this company. It's also making it very difficult to see these internet companies with users. How do you value? They're not making any money, but they have these users, right? It took a long time to get people underneath and say, under that thinking that, hey, users mean money, whether or not they're actually making the money right now, or how much it could be. And so and so you look at Kate Spade when there's everybody in New York has the Kate Spade pocketbook, and you start thinking there's another one too. I can't remember right now, but there was another one that it just skips me. But everybody had this pocketbook, every woman. And then I thought, well, the shorts were all over it because the shorts saying, how can they sell? They just sold 5 million pocketbooks. How can next year they sell 10 and the year after 15? And what people forget is there's this ecosystem that, well, you go in to buy a pocketbook and then you buy a shirt and then you buy some socks, and on the way out you buy this and you buy a wallet, and all of a sudden you're spending a lot more, so they don't need to keep buying pocketbooks. Once you have a hot product, you start buying a lot of other things. It's very difficult to say how much of a lot of other things will you buy, right? That's why Nike is like, once you get them in, Nike, it's very difficult to value now, because they used to sell sneakers through a store, and you can count how many sneakers are going out. Now they got this ecosystem, and you're like, wow, how do you actually value the one guy who can now actually buy? Wall Street has a tough time evaluating that. Not saying that value investing is always right and eventually, or is never right, and you got to keep thinking this new way. But you have to be able to say, maybe in this environment it's not, and you might not be getting to any trade. So if you would have thought that Apple, because at the time the estimates were already high, right? And if you started thinking, well, how are they going to sell more than, even if they sold 100 million iPods, how are they going to make money, to value the way you think it's right? I told people it was going to go, and I was known as Mr. Apple, to be honest, back in 2004, because I was going crazy about the stock. I was like, you got to own stock. But at the end of the day, what I was saying to people is, by the way, Sony sold 100 million Walkmans. But you know what? I said, you know what, to the analyst? I said, you know what type of TV I have? I have a Sony TV. You know what type of computer I have? I have a Sony computer. I said, so once you get a good experience with like Sony and you start getting into the ecosystem, you start buying everything. And that's what I was trying to tell them. That's what's going to happen to Apple. Now, I'm just telling you that it's very, very difficult to evaluate that. And when you find these types of names, like an ATVI right now, it's very difficult to evaluate and to stick your neck out that this is going to go to the moon. You don't know where, nobody knows it's going to go. But if it works and a new transformation works, it goes bananas. Look at, something like Adobe, and go look back at Adobe. Adobe went from you pay per Adobe to a subscription model, and you see where the stock went. Just go look. It's hard to value. So these are things to think about. These are things to look at the options and see how they're playing. But a lot of times when there's transformation, it becomes very difficult to value. The hedge funds understand where it can go, and that's where the risk reward comes in, because all of a sudden it's like, well, I could spend $2 and this thing could be worth 20 because they have great earnings, and people are going to say, holy cow, this thing is going to explode. Is that fair?
Yeah, that's a good story.
Yeah. So that's what we're looking for, that, right? We're looking for what's going to come out.
Cool.
All right.
All right. Well, thank you, Felix. I want to thank everybody for their ideas, their commenting, and engagement. Also, if you want to check out 3 Steps to Profit and learn a little bit more about it, you have the link in the description down there. If you didn't know, you also get a 1 month worth of winning picks, Felix's winning picks that he sends out. So that's a pretty sweet deal. So no pressure. Just check it out for yourself, and we'll see you tomorrow. Thanks, Felix.
Great. Thanks, guys.